Hi, this is Vijay Bambani, and I'm recording this video still firmly and safely entrenched in my residence because of the lockdown. And I also hope that you and your family are staying indoors, staying safe, but watching the markets and keeping your finger on the pulse of the market. This video is actually a trading tutorial. A lot of you have requested that I share some of the insights and some of my experiences, of which I have 34 years in this market, 27 of them being as a founder promoter of an incorporated company that trades all kind of assets, whether it's commodities, currencies, bonds, equities, derivatives on equities. We trade any and everything. So the kind of insight that you get with time and experience is something that I have and I'm willing to share with you. And this video is all about why I post certain things on my social media account, including the Telegram account of Equity Master, the handle of which is Equity Master Official. I would want you to join this Telegram channel because I put up 2 to 3 posts every day, Monday to Friday, and I would want you to read these posts because they are informative, they are educative, and they are profitable. One of the 3 posts that I put up on my social media account and Equity Master's account also is the traded turnover on the NSE futures and options or the derivatives segment. Why do I do that? What is the significance of the turnover? Why you should care, and what it actually tells you about the market. What if you wanted to travel from your house to, let's say, point A? You leave home, you're en route, you're walking along the road, and you find it's a very deserted road. Be honest. What are your thoughts? You're a little concerned, you may be a little nervous, and all kind of thoughts coming into your head. Will I get mugged? Will I be robbed? Will somebody run me over? Am I doing the right thing? Why? Because nobody's walking down that road. Would you really want to trade something if the traded volumes in that particular security or that market is actually falling? Trading the markets is nothing but our day-to-day life experiences denoted in numerical format, in number format. It's not rocket science. It might appear a little intimidating thanks to the media, thanks to the finance industry and the professionals who take it upon themselves. I've been a part of it also, so I'm as guilty as everyone else, can't be absolved, but I've tried to keep things as simple as possible. But the market, it's sexy to jargonize and complicate a simple thing by giving it exotic names. All right. So basically what we are trying to do is very simple. We are trying to equate day-to-day life and trying to extrapolate it to our trading experiences and seeing if the two actually gel. If you don't feel like walking down a lonely road, why would you want to trade a market in which the volumes are poor, which basically tells you that number of participants in the market are far fewer than there should be? Secondly, why do I put up volumes? Because volumes also bring about a more efficient price discovery mechanism. What is price discovery? In the bad old days, we had a public outcry system where you went inside a trading ring, there was interaction, human to human, this was to sell, this was to buy, all right? And you kind of gesticulated with your hands and negotiated prices. Everybody was shouting on the top of their voices like a fish market. So hand signals, human error, errors of communication, bad trades, etc. were all the order of the day. It was also a quote-driven market. So you went to a market specialist or the market maker. He would give you a two-way quote, 55, 57. If you wanted to sell, 57. If you wanted to buy, 50. If you wanted to buy, it was 57. If you wanted to sell, it was 55. The 2 rupees difference was a spread. Enter the digital and electronic markets, and it's an order-driven market. You put in an order, somebody else puts in an order. You're a buyer, he's a seller. If both your prices match, transactions take place. So we are not in a quote-driven market, we are an order-driven market. In an order-driven market, the higher is the turnover, the smaller will be the difference between the buy and the sell, called the bid and the offer spread. The lower is the spread, the higher is your take-home profit. If you're going to spend too much money trading securities which have a very high spread, believe me, you're going to take smaller money home. So you want to trade a market in which the turnover is high. Like you, there are a lot of other people trading that market or that particular counter, and since it's a liquid market, the execution cost or the trading cost in terms of spreads, in terms of fine price discovery, will be more to your advantage. Instead of being taken in by words, instead of being taken in by tweets, Facebook posts, LinkedIn posts, Instagram photos, prefer to look at numbers and develop a head for numbers. The market is completely digitized and binary. It talks to you in a language of numbers. If you try to understand what it is telling you, you can see that the market is actually talking to you day after day. It's just that we do not listen. As long as you're listening, I think you have a good chance of making money. So, simple things, do look at the volumes. The more liquid a counter is, the better it is in your favor. Do follow me on my social media pages. Also, hook up on Equity Master's Telegram channel with the official handle Equity Master Official. Till we meet again in my next video, I'll sign off for this one, but not before reminding you to click like on this video if you're watching it on YouTube. And in the comment section, do let me know what you think about this video and what else you would want me to record for you. Hold your horses. More tutorials are coming your way. That comment and query and request is evergreen. Hey, your wish is my command. I'll be sending you more tutorial videos. Don't mind. Not at all. And do not forget to recommend these videos to your families and friends. Help me spread the cult of knowledge-based investments and trading. Do take very good care of your health, your money, your trades, and your investments. Bye for now. Thank you. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.